Hello, I'm Peter Towers, Managing Director and Founder of ESS BIZTOOLS. Welcome to the ESS BIZTOOLS Accountants Minute podcast. Today we're going to be talking about edition 405 of Accountants Minute. And we're going to be looking at scaling up, why getting the foundations right is critical. Critical indeed, because there are thousands of Australian businesses dreaming of scaling up, growing from a small business into a significantly larger one. But they need a team. They've got their internal team, of course, their direct employees who are going to be working for them on a full-time or virtually full-time basis. But then they need some expert input that they're not big enough to have as direct employees, people like accountants or chief financial officers, and perhaps lawyers or marketing managers, and in some cases, even sales managers. But we're going to be concentrating today and looking at, from the accounting point of view, of course, how can you help your clients scale up and succeed? Now, there's a lot of challenges in the marketplace at present, isn't there? We've still got high interest rates. We've still got high inflation. We've had a federal election, but nothing's changed. And I don't know if anything is going to change in the near future. But we are a democracy and the decision's been made. And you have got potential clients out there who really need assistance to understand where they're going. Too many businesses fail to reach their goals, not for lack of vision, but because the foundations for success weren't properly built. And one of the first foundations for success is you. They need strong accounting input. And I think as a profession, we have to be indicating this to our SME clients time and time again. Either they employ a full-time accountant or they engage your services, which can be provided for them on a more economic basis, where you will offer a virtual service to them. And with today's technology and today's communication, that is very practical. In fact, we have clients, accounting firms, who are doing that for their SME clients situated all over Australia and in some cases in other countries. So as an accountant, you're uniquely positioned to be offering these services to the clients. But timing's everything. Business owners know they need systems in place, but a lot of them delay. They say, oh yeah, we'll get round to doing that. And unfortunately, that time elapses and some of the problems have been created. So what are some of the what have to have foundations that are so important? I think, first of all, there needs to be a clear understanding of how this business operates. What are its systems? What are its processes? Who's got authority to do various functions? Place orders, receive stock, make payments, employ people, set the remuneration package for employees, negotiate with the bank, sign checks or sign other means of paying payments to people. But I think it's also important that we stress to everyone in business that either opening a supplier's account for the first time, or if they're in business and they decide to switch suppliers, that they make some inquiries first. They just don't do it and expect that they're going to be welcomed and that they're going to be granted 30-day payment terms. Because the survey that MYOB conducted about 14 months ago now indicated that that was not a logical conclusion. That just because a business went along to a major supplier and said, we want to become a credit customer of yours, didn't mean that they were going to grant that credit facility to them. And definitely didn't mean that they were going to be placed on a 30-day payment basis. In many instances, there was a request for cash with order. Now, if those businesses had done their cash flow forecasts and had assumed they were going to be granted 30-day payment terms, well, they got a problem right from day one, haven't they? Because their key suppliers are asking for payment up front. So what should you be saying to your clients? I suggest they make contact with potential suppliers before they do anything, before they start the business, and definitely before they move out from their current supplier. They make inquiries first and they get an agreement and they confirm it in writing and they get a confirmation from the supplier as to what the payments are going to be for the key products and what the payment terms are going to be. And another big area that MYOB uncovered, and it may not be news to you, it definitely wasn't news to me, is that a lot of people really do not understand how debtors operate. There were some people who assumed that they had to offer credit to anyone who asked for it. There were others who expected that all customers would pay them very diligently on a 30-day basis. Well, we know that that's not the way the system works. Australia has the highest or one of the highest debtors days outstanding figures in the world. Not many businesses collect their debtors on a 30-day basis, unless they've got a very unique product. They're the only supplier. They can demand that if you want our goods, you will pay on a 30-day basis. But unfortunately, there are not many SMEs in that happy situation, are there? So consideration needs to be given to making sure your clients are utilising a debtors management system, which we have within ESS BIZTOOLS, that our subscribers use, whereby there's communication that goes to this new customer, a request that they complete a credit application form, which the salesperson in the client's organisation would hand over to them. And that credit application form should be checked and analysed to make sure that it is a sound business that is being attracted and that it's not someone else's problem that your client's going to inherit. And then there needs to be a decision made as to whether this particular customer is of such a potential size that they need to be registered on the Personal Property Securities Register. And there needs to be follow-up to make sure that whatever the terms of trade are that are negotiated are abided by this new customer. Another big problem has been that businesses are forgetting or avoiding or hoping it doesn't exist, and that's payments to the tax office. Now, there's income tax being deducted out of employees' wages and salaries. There's superannuation being paid on all employees. And there's GST. And the tax office is looking for these payments to be made, whatever the arrangement is, every 3 months or 6 months. And if it's not, they will take action. I think some businesses got into a false sense of security with the tax office because of their leniency during the COVID period, but that's long gone. And we now have a federal government that seems to be spending a lot of money. So I imagine there's a lot of pressure being put on the tax office to make sure that that money is collected from people and businesses that owe that money to them. So going through and looking at the systems, I think one of the first ones, and it's something that normally when as accountants we're working with a client that preparing a annual tax return and a annual set of accounts. Do you really know how your client's business operates? Have you really looked at the risks that the client's taken and understand their risk protection strategies, if any, that they have? Have we looked at their internal control systems? Who's got authority to commit your client in the day-to-day business arrangements? Who checks that the proper goods that were ordered have been received? and who authorises the payments? There's a whole range of issues that I suspect most of us in public practice really don't understand. I must admit I'm a wee bit surprised when I talk to accountants, and sometimes I get hired as a consultant and we go out to see a client because we're going to introduce some real advisory services. And I just happen to say to the partner of the accounting firm, well, where's this business located? And I get an answer like, I'm not quite sure. I said, what do you mean you're not sure? As we're getting into a car to drive somewhere. And he said, I've never been there. Now, I am very surprised at that. I think if we're going to be offering advisory services, we need to understand our clients and to have at least be familiar with their premises, to be familiar with how they operate, and make sure your team members do that. Years ago, I was the chief financial officer and company secretary of a public company, listed company. And we're in the meat industry, and our major American buyer used to visit us every year. You know, the first thing he would do was walk around our office and take photographs of 40 or 50 people, write down get them to write a little profile on themselves. And I said to him one day, Al, what are you doing with all these photographs? Are you just taking the photographs of the young ladies? Oh, no, he said, I'm photographing the men as well. But I take them back and we put them on a board in the office so that I say to my team, when you're talking to someone in that organisation in Australia, look at their photos, go and have a look at them, know who you're talking to. I think it's a great idea because it lets people know who they're communicating with, and it's more familiar with it. Who's doing what? What's that person's role in the organisation? So it's part of the business analysis of systems. I think it's one of the first jobs you should be doing if you're going to commit to a client to be supplying advisory services. And then the second one is, unless the client already has it prepared, a business plan needs to be prepared. And not one that you just go off into your boardroom and sit down there for a day or so and write a business plan for the client. I don't think they're worth anything, to be honest. I think you need to set up a meeting with the leadership team to send them some material beforehand. And within ESS BIZTOOLS, we have all that you can get their minds thinking about their business. Where do they want it to go? What do they want it to look like? What needs to be changed? What improvements are needed? Who are some potential customers? What's going on with their competitors? Has a new competitor arrived in their area? What's their strategy to compete with that business? Have they made some inquiries about how some of their people in the same industry have competed with them in other locations? Have you done benchmarking comparisons for this client? How do they line up on things like gross profit percentage, productivity percentage, and bottom line performance compared to other businesses in the same types of industry? Now, that information is readily available today through benchmarking services, benchmarking.com.au. So you can get that, so you can have those conversations. And this is important that this is thrown into the discussions on business plans. So I see the business plan as being a vital communication. Your role, I believe, is to act as the facilitator and the note taker and the drafter of the document, but then you submit it back to the leadership team and sit down with them again and go through with it. And invariably, they'll want to make some changes. Some of them might be cosmetic, but it gets their commitment. And I think that's very important. We don't want a business plan that when something gets a bit wrong and it gets a bit rough, that people in the leadership team start saying, oh, well, the accountant wrote that. And what would they know about business? You've got to get them to make their decision. You're the scribe. You're the recorder. You're going to be the storyteller in the future, but you need their input. And then we move into the predictive accounting reports. Never prepare them independently of the business plan, please. The predictive accounting reports, budgets, key indicators, cash flow forecasts, projected balance sheets should all be the financial interpretation of the business plan. But it's very important that the key data is analysed, that there's proper reviews made as to what the forecast debtors balance is going to be, or the inventory investments are going to be, and are they realistic? And if there's major capital expenditure being undertaken, what's it going to cost? And has the business got sufficient cash flow to enable those bills to be paid? The budgets, cash flow forecasts, projected balance sheets combined with the business plan enable you to be the storyteller, to be able to sit down and analyse in fairly simple language, not complicated accounting jargon, and show your client what their financial position is going to be like in 3 or 4 or 5 years' time, if they abide by the decisions they have made in the business plan. Because, as I've said before, the predictive accounting report should be the financial interpretation of the business plan. The business plan that they've signed up on. This is what it's all going to look like. Are they happy with that? Do they want to make some changes? Give them that opportunity, because it's their business. One of the most important functions I think you can play for your clients is to make sure they have a rhythm of meetings. I'm amazed at the number of SMEs that don't have that process put in place. A rhythm of meetings. Daily, the daily huddle. Might only be 5 to 10 minutes. What went wrong yesterday? Did we have any big wins yesterday? Or is there something else arose yesterday that's urgent that we need to have a look at? And then we have the weekly meeting. I think a weekly meeting is very important. One of the problems, I think, with our profession, that when we have concentrated on the preparation of just an annual set of accounts and a tax return, and obviously since GST started, the business activity statements have brought more regularity of looking at some of our clients' affairs. But it's nowhere near what would be occurring if you were the full-time accountant or the full-time chief financial officer. You'd be there all day, every day, looking at what was happening. And you would have a lot more familiarity with the business. But businesses, as they get bigger, really run on the daily, weekly cycle. They want to know the information. They want the key financial data. They want to know if something went wrong this week in one of the operations, not all thrown into a big pool and of a consolidation of 4 or 5 or 10 or 300 separate businesses, but isolated so that if there is a problem, it can be analysed and determined what went wrong, and so that steps can be taken to fix it. Because one of the problems is, unless these problems that occur in week 1 or week 2 of each financial year are fixed, they can continue to occur for the rest of the financial year. Because on the basis that they're only getting an annual set of accounts, it might be quite a long time before you may have then finalised some information and said, gee, your gross profit percentage was down a fair bit this year. It's too late to go back then. Now, what causes these problems in a business? Well, it could be fraud. And if someone gets away with fraud once, they're more likely, I understand, to continue to do it. They found a loophole. No one's looking at that. Well, someone should be looking at it. And that's why the weekly reviews are so important. And then we go to the monthly review meeting. It's very important. We've got a budget and a cash flow forecast, so we need to compare how the performance has gone compared to what those budgets said. And there needs to be a variation report prepared and discussed with the leadership team so they are familiar with it. Not just given to them in a random set of numbers and jargon. We need to be able to communicate with them, to talk to them about what actually happened, and make sure they understand that what's the strategy out of this particular problem. The monthly financial accounts play a key role. Not as important as the weeklies, I think, but because they are the proof that the data used in the weeklies was correct. And this is very important if you are going to get the leadership team to be confident in the results that are produced each week. Because there are some estimates that are included in calculating weekly performance reports. So the CEO will need assurance at the end of the month that when you reconciled the actual monthly financial accounts with what you had reported 4 or 5 times during the month, 4 or 5 weeks, of course, was accurate. Because if the leadership team is running the business based on the weekly performance reports, they want that assurance that when the monthlies have been prepared, they have confirmed those results. I was, as I said before, chief financial officer of a public company. The CEO and I would walk into the public company board meetings, and just before we got to the door, and it was literally as late as that, he'd say, "Oh, yeah, by the way, Pete, how'd you go on the reconciliation of the weeklies with the monthly accounts?" I said, "Yeah, they were all right. We're within, in our industry, a few $1,000s didn't really matter, but we were close. We were there, or we were in front." That was the assurance he wanted to know. I don't think he read the monthly financial accounts, to be honest. He had a good look at the balance sheet, but I don't think he really read them. What he wanted was the assurance that the accounting team was on top of it and we were reporting to them if there were any variances. I think you can do the same thing. The cash flow analysis is very important in this whole process. We've prepared a budget, in which I indicated, obviously, the cash flow forecast is an integral part of it. But then what happens during the year is very important. It needs to be forward planned all the time, preferably well over 12 months, so that you can see what variations are likely to occur. So that if there's going to be a problem because of the need to build up inventory, because there's problems in getting supplies because of the wars, and now we've got this latest war in India and Pakistan. Hopefully it won't blow into anything bigger, but unfortunately there are problems in at least 2 other sites around the world that we're very familiar with, and these things can cause all sorts of delay problems in getting products. So that might mean that your client needs to increase their inventory. Instead of holding 6 weeks production supply in raw materials, they need to now go out to 10 weeks. And what's that going to cost them? And have they got the finance to be able to do that? One of the things you might be looking at in helping your clients who are scaling up is research and development. I'm intrigued at times that people tell me they're going to claim research and development. I happen to ask them what's their business structure, and I find out they're a partnership, and I say, well, you can do it, but you won't be able to claim the tax benefit because you've got to be a company. So we need to communicate that to people who are contemplating undertaking research and development. But I think it's an activity that you can really get involved in. And in ESS BizTools, we've prepared our product packages to make it a lot easier for you to be able to communicate, because we've got 13 flowcharts in our system, and they all go for more than 1 page. So it's a means of clearly identifying to the client what has to be done. And very importantly, what's the client's role in all this? Because your role is more akin to being an internal auditor if you're helping someone with research and development. You're not there to do the research. That's your client's concern. That's their project, not yours. But I think that your real role is, as the internal auditor, to make sure that the forms have been completed, the records have been kept and appropriately filed, because it might be 3 or 4 years before someone from the ATO is asking for them, and you need to be able to produce them. And in my experience with helping people on R&D, I've noticed that there seems to be a lot of overseas residents that have been in Australia for 1 year or 2 years on a bit of a sabbatical, and they get involved in working in these organisations. Well, they're not at hand to be able to be brought in to explain what they were doing. It needs to be documented day by day, week by week, so the records are there. That's where the system can be implemented. In our system, we have 46 forms and 13 flow charts, 6 separate papers on various aspects of research and development, so you can break it down to be able to communicate with your client. Funding for the business. I think we should have funding in the back of our minds all the time when we are talking to SMEs, especially SMEs committed to scaling up, because money goes pretty fast when you're undertaking all these activities. And these days, it's a lot easier than what it was 20 odd years ago. We now got crowdsourced funding, equity raising. We've got early stage innovation company. We've got a growing group of other investors in Australia interested in investing in companies, either through Section 708 of the Corporations Act or other ways. To get that sort of support, you need to have those key documents that I've been referring to a little bit earlier. The business plan, the budgets and the cash flow forecast, projected balance sheets, the systems in place, the team in place, team training, so that if you go off and talk to potential investors, they can get a strong feeling that this is a well-run business. It's well organised. It might be small, but it's growing. And they would look at supporting it. Corporate governance is another key area that I think you can be a mentor to your clients. Not every SME client will want to spend the time and the money to undertake the Institute of Company Directors Diploma course. I've done that course and been a participant in the Institute of Company Directors Affairs, but not every person in running a business will be interested. So within ESS BIZTOOLS, we've developed a SME version of corporate responsibilities that you can use to communicate with your clients. Then if they're serious and they want to become a public company director or want to enhance their knowledge and their reputation, they can go off and do the Institute of Company Directors course whenever it suits them. At the beginning, I said that it's very important that your clients have foundations, that they understand that there are many challenges in running a business. And I said too many businesses fail to reach their goals, not for lack of vision, but because the foundations for success weren't properly built. What I've referred to in this discussion with you today are some of the key foundations that SMEs need. They need your assistance to implement many of these and then to have the information flow continuing from there on. Please visit ESS BIZTOOLS website to view the resources which we have available for accountants and bookkeepers. You subscribe for a package. We have special webinars coming up over the next 2 weeks. The first webinar is on the 14th of May, whereby we're going to be looking at the starting off of running a business. And then on the 28th of May, we have scaling up as the feature of the webinar. I hope you're able to join us. On our website, where you're looking at Accountant's Minute, you can see that there's a log on to just register for the webinar. There's no charge, but that allows us to communicate with you and send you additional information like the PowerPoint slides and copy of the webinar recording after the webinar. So thank you for joining us. And if you've got any specific questions you'd like answers for, please send me an email, peter@essbiztools.com.au. Stay safe. Have a great day. Goodbye.